Right, in the previous video what we did is we completed step 1 and step 2. We had the skeleton, we entered all the figures from the pre-adjustment trial balance, and now we're moving to step 3, which is to enter the adjustments next to the appropriate line items in the financial statements. Now before we can enter the adjustments, we first need to understand them and determine what the adjustment is, and then we can take the adjustment to the appropriate line item. And then after we'll do step 4 and 5. So let's go. We've already dealt with all of this information in the pre-adjustment trial balance. Now here we go. Our additional information number 1. RE Vision Limited entered into a 12-month lease agreement whereby they let some of their office space owned by them at 36,900 Rand per month. So what does it mean if they let some of the office space owned by them? Okay, RE Vision is the entity we're talking about here, and RE Vision is the entity that we are preparing the income statement and the balance sheet for. So this is the entity, and they let some of the office space owned by them. That means they let out some of the office space owned by them. In other words, they own the office space and they received 36,900 Rand per month for this office space that somebody else is renting from them. And they signed a 12-month lease agreement, so they're going to receive 36,900 Rand for 12 months. Alright, now let's see. The full contracted amount has been received already. The lease agreement was signed on the 1st of March 2013. Right, so let's quickly draw our timeline, because this will help us to determine how much of this income actually relates to the financial year. Remember, that's our question. We want to paint the true picture of the incomes and expenses incurred as well as the true picture of the value of our assets. Okay, so in this case we're dealing with an income, so we want to paint the true picture of the incomes that was earned during the financial year. So let's have a look. The financial year runs from the 1st of July 2012 all the way up until the 30th of June 2013. So there's my financial year. Now my question said that this contract was signed on the 1st of March 2013, a 12-month lease agreement whereby the company will be receiving income. Right, so, and that started on the 1st of March. So that would be January, February, that would be around about a year. 1st of March for 12 months, that is going to run for 12 months there. So by the 30th of June, how much of this 12-month contract would already have passed? Well, we've got March, April, May, June. That is 4 months. So 4 months fall within the financial year. The remaining 8 months is after the financial year. So the contract was signed on the 1st of March 2013, and it's going to end on the 28th of February 2014. The question is, how much was received during the financial year? Well, we've received the full 12 months during the financial year. So we've received 12 times, what is the amount per month? It was 36,900 Rand per month. So we've received 12 times 36,900 Rand already. That is what we have received. Alright, what actually relates to the financial year? Only these 4 months relates to the financial year. So the portion that we've actually earned is only these 4 months, because we haven't provided these offices to the tenant for the remaining 8 months by 30th of June, by the year end. Remember, we're doing the financial statements at a point in time, specifically the balance sheet. So by 30 June, we've not yet provided these services. So we've only earned these 4 months, 4 times 36,900. So currently received is 12 times 36,900, which is equal to, if we quickly calculate that. Right, so there we go. The amount that we've received is 442,000. We should have actually only received this 147 because that is the portion that we've effectively earned. We still owe these tenants 8 months of this office space because they've already paid us for it, but they've not yet received the office space for those 8 months. So these 8 months is what we owe, and this is the adjustment that we need to make. So to get from the 442 to the 147 in my incomes, I'm going to have to decrease my incomes by the 8 times 36,900, which is going to be, that is 295,200. So this is the adjustment that I need to make, and this adjustment is what I need to decrease my incomes with. So my incomes need to decrease, specifically rent income needs to decrease, all right, by the 295,200. all right, and because I owe, what do I owe? I owe services, right, specifically the office space. Remember, the entity said they let some of the office space owned by them at 36,900 Rand per month. So that means Revision Limited owes this office space to the third party because, or to the other person, because they've already paid. They've already paid for these 8 months, but they have not yet received the office space. So they owe the services, specifically here, the office space. So because they owe something, there's also going to be a liability that increases for this adjustment. The question is, what type of liability is this? Non-current or current liability? And because that we are going to provide these services within the first 8 months after the year end, this is going to be a current liability, and it's going to form part of the trade and other payables line item. Alright, so my liability increases and my incomes decrease. So let's quickly record that transaction there. So we're going to reduce my incomes with minus 295,200, reduce the rent income, and my trade and other payables need to be increased. Why? Because I actually owe the services or office space that has already been paid to me. So I owe them this office space, so I need to increase the liability with 295,200. So I can just put a plus here to indicate that I'm going to increase the liability. So I've got my original trial balance figure, which I'm now adjusting, and then we're finally going to get the total amount that we fill in our final column. That was transaction 1. Remember that we had the two effects for this transaction: the income that decreased, every transaction a debit and a credit, and the liability that increased. Perfect. Right, so adjustment number 2. At the year-end, Revision Limited owed the independent auditors, Audit Co, an amount of 62,000 Rand. Alright, so this is an easy one. The key word here is owed. Alright, that's telling us that we've got a liability here that is going to increase. So what's happened here is we've used the services of the auditors, alright, but we haven't yet paid them. So because we've used their services, we need to record an expense. Alright, so because we've used their services, we're going to have an expense that is increasing. So our expense is going to go up because we've used more of the auditor's services, and because we have not yet paid them, our liability is going to increase as well because we still owe them this 62,000 Rand. So my expense is going to increase with 62,000 Rand. My liability is going to increase with 62,000 Rand. Now, is this correct? Because our double entry principle says for every debit there must be a credit. Well, yes it is. If an expense increases, I need to have a debit. Remember, debit, expenses, assets and drawings if there was an increase. Liabilities, credit liabilities, incomes and capital. So that is correct. I've got my debit and my credit. Remember, the rule is not for every increase there must be a decrease. It is for every debit there must be a credit. So let's go and record this against our line items. So which expense line item will we include the 62,000 Rand? Well, the line item that we're going to use is audit fees, and that will be under our operating expenses. And the line item for the liability that we're going to use, again, we need to ask ourselves, is this a non-current liability or a current liability? Now, to determine that, we need to ask ourselves, when are we going to settle this liability? Within 12 months or later than 12 months? Well, we owe the auditor 62,000 Rand, so we're probably going to pay that within the next 12 months. Right, so that's going to be a current liability. And the specific line item that it's going to fall under is trade and other payables. So you'll see here, we are more concerned with the line items affected, not specifically which account is affected, but the line items that are affected. So if I go to my financial statements and I'm looking for audit fees, it's in my income statement under the expenses part of the income statement, operating expenses, audit fees, and that needs to increase by 62,000 Rand for the amount that we still owe to the auditors. We've used their services, but we've not yet paid for it, and we've got a liability because we've not paid them, plus 62,000 Rand under trade and other payables. Right, that was transaction number 2. Transaction number 3 is very similar. The Revision Limited owed one of their directors, Mr. Jonathan or J. Ganesh, I'm just saying his name is Jonathan, 50% of their contracted amount of 267,000 Rand. So the first thing we're going to do here is to calculate the amount that we owe. So we owe 50% of 267,000 Rand. So if you calculate that, you're going to get a figure 133,500. Right, that is the amount that we owe. Now, because we owe something, we're going to have, yes, you guessed it, a liability. So my liability is going to increase again by the 267,000. And again, because we're owing this money to a director, why do we owe him this money? We owe the director money because the director has offered his services to the entity over the past financial year. Right, so because we've used the service of the director, we've consumed his services, we're going to have an expense that also increased by the 267,000 Rand. The line item for the liability again is going to be the same as the audit fees, trade and other payables. Okay, trade and other payables, and the line item for expenses is going to be director's fees. And this one will be in the balance sheet, this one will be in the income statement, specifically under operating expenses. Right, so we can go to our financial statements and include that. So we're going to say plus 267,000 Rand next to director's fees, and we are not done. Remember, every adjustment needs to affect the financial statements in 2 places. So the other leg is going to be on my equities and liabilities, because we owe more money to my directors. And sorry, that's not the correct amount. Sorry, I apologize for this. That should be the 133,500 and the 133,500. Alright, so it's going to be plus 133,500. Remember, in both places, plus 133,500. Good. That is transaction number 3 done.